Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, here we are again at the end of a week, and we saw some news come out today that everybody's been waiting for, which was the announcement by the president-elect to stimulate the economy. They're going to spend $1.9 trillion, and I think some people were actually disappointed. I've heard numbers up in 3 and 4 trillion. Don't be too disappointed because it's coming down the road. As I was telling you going back to last June, that the Fed continues to say that they are going to add the money to the markets, but they need someone to spend it, and that's going to be the fiscal side. I've talked a lot about the fairy godmother, which is Janet Yellen, who is expected to come in and run the Treasury. She's going to be in charge of spending the money. We've got minimum wage up to $15. We've got money going into education. We have $1,400 stimulus checks coming out. So that universal income I keep talking about is continuing to happen. And there's also going to be an extension of all the forbearance and the rent restrictions going all the way out to September. So everything that we saw happen last year is just being extended. We're going to continue to live in this environment that they've created. Initially, early in the session, started to think that this might be a good thing, but quickly started to fade and just faded into the close. The question really is, will the markets reject this stimulus? Do they actually really care? We've waited so long for it. Does it really matter? And has the markets already priced in so much of this that there's not a lot left? As I've been talking over the past several sessions, I've seen the markets continue to struggle, and as you'll see in the technical section tonight, we're starting to see some alarming patterns setting up primarily on the weeklies. I'll go through all that in the technical section here in a few minutes. The other thing that continues to be out there is that our database is starting to get a little extended on the short end of the market. We will see something very interesting today as we are coming into Friday, which is also where our intermediate models run. We'll see what kind of orders we get out of our database and see if there's any liquidation or any signs of weakness. When I look back at last year at this time, we are starting to see some selling in the intermediate models. Now we're very close, interesting enough, to the same statistics that we were at last year. We are around 75 to 80% long on the intermediate database. As we came into the end of January last year, we started to see substantial amount of selling, and especially when we got into mid-February, there was a lot of selling coming in where the database went from about 78% down to 52%, and of course it continued from there as the markets went into full-out collapse last March. Here we are at the middle of January, and as we finish this month, it's going to be very interesting to see if there's anything coming out of the database might lead us to believe there might be a correction coming. At the moment, I don't see it coming, but we are starting to see substantial amount of momentum being bled off, and this is bringing in concerns, as I mentioned a few minutes ago. So let's go ahead and take a look at the charts, see what they're telling us for the end of the week. As I review the WaveTech database, the short-term database continues just to rotate. We had about 550 new buy signals, about 300 sell signals, and it continues to remain around the 71% bullish at 70.97. So we've just been rotating here throughout the week. So the database just continues to churn at these levels, which is not necessarily negative or bullish, but it does suggest that there is a rotation going on, which is a typical phase before we see a liquidation begin. So there continues to be this concern over what's going on with the database and the momentum in the markets. As we come into Friday, the intermediate database is 78.81% bullish, and this is likely to remain at a high level. I don't see us seeing a lot of liquidation unless there was a big collapse in the markets today. Otherwise, we're likely to see just further rotation and this thing maintain around this 78% level. Now, if by chance a lot of positions are starting to fade and we see some liquidation, this will give us some indication of what is likely to happen as we go forward, and I will cover that on Sunday night's video. As we begin with the S&P futures tonight, we are seeing some weakness. We're down 0.36 on the session at 37.77. As I've been talking about over the last several days, the 10-period moving average at 3772.35 is the critical level. The low so far has been 37.7550. A close below this level today will signify a move down towards the 21-period moving average. And as I've been mentioning in the comments over the last couple of days, the momentum is starting to fade even on a short-term basis. Notice that the PPM 1, 2 have just crossed through its first and second derivatives, and PPM 3 has been under those derivatives. This suggests to me that there's a growing probability that we're going to move down toward the 37.37 level, and possibility of going down between 3,700 and 3,690 over the next 4 to 5 sessions. Now, if we manage to remain above the 10-period moving average, we could see this thing extend, but it does look like the weakness is starting to really show up even on a short-term basis. As we go to the SPX, SPX has a similar pattern, but we should see everything turn down tomorrow if we continue to trade as the futures are right now, and we'll start to challenge that 10-period moving average 37.76. Yesterday we went out at 37.95, so it'll take about a 20-handle sell-off to get below that level, so that maybe the probabilities are not real high, especially as we look at the market grid for tomorrow, where we're likely to see the possibilities of going down toward the S2 number, which is 37.79. That'll be just above that 10-period moving average. But as we look at the weekly charts, this is where the weakness is really starting to show up. And we've been climbing up into this wedge, and I've talked about this substantially over the last several sessions, that we're seeing a contraction in the market grid, which usually suggests there's some downside. Now, as we look at the PPMs, you see PPM 1 has rolled over substantially. PPM 2 is below its first and second derivative, and PPM 3 is turned down as well. Now, the 10-period moving average on a weekly basis is at that 36.93 level, which is possible, and I just covered on the daily chart that would be a move down toward the 40-period moving average, and this is highly likely to occur. It would have to close above the 38.24 level today to reverse this declining momentum. Next market that I'll cover is the NASDAQ futures. They are trading very near the 10-period moving average. We're currently trading 12,883. That average is 12,778. As we look at the market grid, S1 is 12,539. We have had a low overnight so far, 12,646. So I do expect to see S1 challenged on the daily, and it is likely that the range that we'll see today will be an R1, S1, but I think there's a possibility of expanding this on the downside to becoming an R1, S2 on the NASDAQ. The weekly chart, just as in the S&P, is also showing substantial amount of weakness. We're seeing the PPMs all rolling over, starting to show some downside risk, even though the PPMs are at fairly robust numbers at a plus 0.65, 0.53, and 1.07. What that suggests is we could trade down to this 12,527, which would be the 10-week moving average and similar to the 40-day moving average. So there is some moderate downside, and what we are not able to predict at the moment is if we do see this weakness, whether there will be further weakness and the possibility of declining back toward that 21-period moving average, which would put us back at 11,972. The next market I'll cover is the Russell. The Russell has just been on a tear as it's been moving into all-time new highs as the market accelerated. We did see the S&P yesterday down 0.04, the NASDAQ down 0.1, and the Russell was up 2.1%. I actually think this market is starting getting a little frothy at these levels. We also saw an RTX sell signal, which would suggest at least a 1 to 2 day sideways to down type pattern, and looking at the market grid for today on the daily would suggest a move back towards the 2137 level, which would be an S2 level. Now overnight we are seeing the futures down about 0.65, down about 13 handles. So we are seeing this weakness overnight in the futures on the Russell. So this is likely to come in and start to print down some of these numbers. As we go over and look at the spread chart, you'll see that the Russell continues just to expand sharply, but I am starting to see some signs that this spread is getting a little bit overdone, and we're likely to see some type of consolidation even on the spread. The mid cap is stalling. The Russell is still punching out new highs, but we're seeing some momentum loss and some signs of some moderate risk on that trade. Now, I still think it's a good long-term hold, so I would not get out of the trade. But if you do have a fair amount of it on, you put it on, I would look to lighten it up a little bit. The final market that I'll cover tonight is gold. Gold continues to trade just below its moving averages. It's just below the 200-day moving average and below the 40-day moving average, and the 10 and 21 period moving averages are declining slightly. In fact, PPM1 is at a 0.23, which is just at trend mode. The 200-day moving average is at 1864. We're currently trading at 1850. We also have the moving averages. The 10 and 21 are exactly the same, 1881, and then the 40 is at 1861. It would take a close today above 1861 to set any type of positive tone. It could happen, but we're seeing a very flat session overnight. Would trigger a rally back towards the 1881 level. On the downside, if we close below 1845 today, which would be below S1, this would suggest that we'd see further declines and possibility of going down to at least the 1824 level. As I mentioned in yesterday's video, we could trade ultimately down toward the 1776 level, which would be a retest of the lows of this pattern that was made back in December. But overall, I do expect to see this market remain flat, and we'll just have to look for the pivot point on this trade. I do not see any major trades or anything to enter at this phase. This will complete the video. Thank you again for a great week. We'll talk to you on Sunday night.